comes to the defense space, with everything happening after Putin's visit to India, India signing a defense pact with Russia, the order book of some certain defense companies seeing a lot of exuberance, and of course the government allocation and the focus that the government has on developing indigenous defense capabilities, all of that has made it to the headlines quite recently, and so much is happening in that sector. So let's welcome on board Jyoti Gupta, research analyst at Nirmal Bang Institutional Equities Research, to get a better sense on where the defense space is headed. Jyoti, I was going through your note. First of all, good morning and thanks for joining us. You've mentioned you're cautiously optimistic on the defense space for the remainder of the year. Tell us what drives this rationale. What is your view on where the defense space in India currently stands?
Thank you so much. Good morning, and thank you so much for having me on the show.
Morning.
So, the defense industry is in the midst of a very strong and broad-based order book upcycle. Now, PSUs continue to anchor the sector with large, long-duration platform orders that provide multi-year visibility, while private players are scaling rapidly, in electronic subsystems, UAVs, and export-linked programs that convert faster. Now, most companies currently now have 2 to 5x annual revenue covered by contracted orders supported by rising indigenization, steady modernization programs, and accelerating export demand. Importantly, the order book quality, which gives contracted visibility, subsystem intensity, repeat programs, and export mix, has become more relevant than absolute size. Now, with approvals, we roughly have now something like a 3 trillion of approvals cleared in 2025. I think sector-wide backlogs are set to expand further by major programs like QRSAM and landing platform docs. And that's the whole reason why I would like to stay cautious on the optimistically cautious on the sector.
Hi, Jyoti. Morning. This is Harsha. Great speaking with you. Jyoti, let me try and get a sense first with regard to execution. See, there's absolutely a strong visibility with regard to order book, but really the concern for the equity investor is how that order book is going to get executed over a period of years. Are we seeing a likely accelerated growth path? Maybe not right now, but maybe a couple of years from now, given the kind of visibility we have on the order book.
You see, while there is a steady execution both from the public and private side, however, it remains inherently milestone driven and uneven. So typically, the program cycle is anywhere between 18 to 48 months and influenced heavily by design complexity, testing, and certification requirements, and lead times for imported components. So revenue conversion is lumpy and often back-ended towards user trials and year-end acceptance procedures. So while PSUs deliver huge platforms with predictability but slower cadence, private players are able to execute subsystems faster owing to flexible manufacturing, deeper vendor ecosystem, and quicker design iterations. So if you ask me, you will see very good numbers. In fact, you know that the sector is lumpy. First half is always a bit slow. Second half is very, very strong. You will see very good numbers in the second half. For most of the defense companies, you will see some, downward surprises from some companies who have done exceptionally well in the quarter two. But I think that's part of the business because it's an entire ecosystem. One supplier delays and the entire supply chain actually is delayed. I think that's part of the business.
Okay, and Jyoti, like you were talking about, you the differences in performance between the PSU defense companies as well as the private players. What would your pecking order be in both these baskets combined?
So let me give you a little backdrop, and then I'll
Sure.
give you my pecking order. So a lot of people say, do you justify the valuation? So I say that the companies do justify elevated valuations because the sector has shifted from a cyclical manufacturing to more of a structural multi-year growth story backed by record order books, rising exports, strong policy support, and improving profitability. Now, and that is offering unusually high earnings visibility. Look at private sector, which commands premium multiples due to the presence in high margins, IP-rich niches, and faster execution, and strong export traction, enabling you'll see almost like 20-30% growth. While PSUs trade at moderate premiums, giving stable cash flows, monopoly positions, and long platform pipelines. So sector-wide margins are expanded, working capital has tightened, and capital intensity has fallen as business models shift more towards design and subsystem-led offerings. So the market therefore values defense companies as long duration compounders, even as near-term earnings remain lumpy due to milestone-driven program cycles. Now, within that framework, I would still have. I'm very hopeful, despite a very disappointed event with HAL. I'm still positive with HAL should deliver 7 aircrafts this year, and any issues that have happened in the delivery of the first one should actually eventually be taken care of, and followed by BEML, and then data patterns and solar energies, solar industries. I don't think, and in fact, the entire ecosystem will perform very well, but we need to understand who are going to be outliers. And within that framework, I find these companies who should perform really well in the next, let's say, 6 quarters.
Jyoti, how reliant is Indian defense manufacturing on rare earth and China? Give us that angle.
Uh, so defense, yes, there is some sort of reliance on the rare. In fact, a lot of defense overall does depend on rare earths. And as far as dependence on China is there is to some extent dependence on China's rare earth materials, because of course China dominates in that sector.
Okay, so that's on rare earth. But Jyoti, talk to us about what lies ahead for some of these private capex players. A part of your report also highlights on the strain in terms of capital that these private players have with them. What impact could it have on earnings going ahead?
So basically, the EBITDA margins that you see for most of these companies, it's actually factored in for the next 2 years. So what you see in FY25 full year margins is what you should expect for the next FY26 and 27. I don't see any upside surprises coming from there, unless there is, a new project, or for example, for MDL, let's say if P75 comes, now that could be a bit margin accretive, and for BDL once QRSAM. So there could be some surprises. For data patterns, it could be a surprise once the mix order for radar for mix come through. For Astra, it could be once the ISA radars they start delivering. That's where we should see some sort. But
Sure. Okay, we'll get back to that conversation in a second. We're just looking at the listings of the day. Wakefit listed at a discount of about 0.8%. Corona Remedies doing very well for itself. A very solid premium at about 37.25% for Corona. A little bit about both of these IPOs. Let's talk about Corona. What a listing that IPO has seen for Corona. The issue price was at 1,062. It's at 1,448 right now. A very healthy premium coming in for Corona. And the entire IPO was an offer for sale. For Wakefit, issue price at 195. The stock at 191, 192 thereabouts. So absolutely flat listing with a slight bit, a hint of a discount on the listing. Fresh issue of 377 crores, offer for sale of 912 crores almost. The total IPO size about 1,289 crores for Wakefit, and the issue size of 655 crores for Corona Remedies. That saw some very strong subscription of about 144.5 times overall subscription for Corona Remedies. Wakefit has seen about 2.5 times over subscription. But yes, Corona justifying the kind of subscription that it has seen from QIBs, NIIs, retails and employees. Very healthy listing coming in. So yes, these are the two listings of the day. Wakefit Corona Remedies, pardon me, as well as Wakefit Innovations. But shifting focus into defense, Jyoti, pardon me, we had to interrupt you to mark these two IPOs. But complete your point that you were making about the working capital availability of the private sector companies and the impact that you were talking about that the margins could see going ahead.
See, the margins are going to be stable. As I said, for FY25, the margins that the companies have actually locked in, you should see that for the next 2 years at least, unless there are any surprise new products which come in through and which would actually give you a little improvements. But having said that, also, I don't think it will be anywhere more than like 50 bips or maybe 20 to 50 bips improvement in the margins. The other part of working capital is, yes, there would be private companies, there could be some strain, and because it's more of because where we are, we're in an industry which is monopsony, and unless delivery happens, there could be some issues. You see that the normal working inventory days are as high as 250 average, and for some it high. So I think broadly that should stabilize, but I don't see major reductions happening in the working inventory days. So obviously there will be some, but I think that's usual in this industry and should not be a major cause of concern as of now.
Okay, and Jyoti, lastly, before we let you go, with the kind of deals that we've been signing with Russia, we're also in talks with the US. Give us a sense of where do you think the budget allocation for defense could lie? A month or so later, we have the budget that's going to be coming out on 1st Feb. What do you think the commentary or the sentiment is going to be around defense this time?
So see, right now we are in a bit of a situation which is a bit sensitive and tricky. So yeah, there will be increase in budget allocations where LEV is quite low as compared to other countries, US and all. So there will be some increases in budget allocations. However, I feel we already are sitting with a huge backlog of orders which needs to be executed. Any increase in budget or any new orders will only pressure put the companies under pressure, which of course also on a positive side you should see that a lot of private companies are going to benefit from that. So next 5 years you should see I would say next at least this budget you will see a budget increase in budget allocation, and the industry is going to thrive for the next 5 years. Pretty strong sentiments that I see, and the kind of work order, and because after that you will see more of maintenance work going on. But yeah, we need a strong, very strong fleet as of now in this industry.
Jyoti, your absolute top 2 or 3 picks within the defense pack, and give us maybe a very short thesis on what will likely play out among those companies.
HAL, which you see, that there's a huge deficit of fighter jets, which is there. And HAL has already got, has already put up 3 lines. And you see there's a lot of private participation which has come through for HAL, and therefore that's going to step up execution. So the revenue visibility, which was not there with HAL 5 years back, I think that is quite clear. And you should see delivery of major defense war platforms coming through in the next 5 years. Next is BEML. BEML, mainly will be driven by rail and metros. You will see delivery of 2 trains. They have some 10 metros actually to be delivered, which they should do by this financial year. And of course, next they're sitting. In fact, you see BEML, which completely dried off its order book. They are sitting with almost like 28,000 crores of order book, and it's only burgeoning. So BEML looks good. Of course, mining side is also improving because has actually improved because of the war effects, the impact of aftermath of war. They've had a lot of orders in terms of their mining equipments from Russia, Syria, Ukraine, etc. So that is one. Third, if you see data patterns, I've been talking about the data patterns will give you a surprise factor. So, anyways, the company has surpassed my revenue estimates. Third and fourth quarter also, I do not see revenue flat or negative. It is going to be on the positive side. So there is a surprise for data patterns, and of course, there's this huge order which I believe from mix which should come. And there are certain products in data patterns which I find very very promising, which should eventually culminate into revenue visibility for the company, and therefore looks very strong for me. And solar, if you see their Pinaka orders and all the delivery platforms that they already have, and this is one company which is well on time, and they are not, I mean, I don't see them missing them, I don't see them missing deadlines. So the numbers that I've actually factored in clearly states, and I'm pretty sure they will deliver. In fact, they could even surpass my estimates, because to my knowledge, there is no delays, or there is no issues in terms of raw material or from the supplier side, and their execution plan is quite well on time.
Okay. Jyoti, really appreciate you sharing your outlook on the defense space with us. Thank you so much for your time today.
Thank you so much. Thank
Okay,
you.
viewers, on that note, we'll slip into a